Good evening, everyone. Happy Saturday. Today is Self-Care Saturday. That's what I like to call it, Self-Care Saturday. Saturdays are usually my days to spend time taking care of me, focusing on me, doing things that are pleasing. And guess what? Today, talking to you is pleasing because I know that I'm sharing some valuable information that could help change lives. Hope everyone's Saturday is going well. Hope that your day is getting some things done, getting some things accomplished, having a little entertainment, relaxing, whatever it is that you feel like you like to do or need to do. I hope that your plan for the day is being fulfilled. Today is the last day of the 6-day series where I am talking about financial freedom and steps to have financial freedom. Today is the day that I'm going to bring it all together, everything that I've covered over the last 5 days prior. I'm going to bring all of that together in the form of a roadmap for you to follow. If you are just joining, please check in and let me know where you're checking in from. Definitely share if you're catching this on the replay. Type replay in the comments so that I know you're catching me on the replay. And definitely share because I am going to walk through, recap what we talked about over the last 5 days, and then talk about what steps, how to bring that all together and the steps that you need to put yourself on the road to financial freedom. And talk about mindset because making a change to get yourself on the road to financial freedom requires a mindset. Really, any type of major change that you're making in your life requires that you have the right mindset. All right. So I am going to go ahead and get started because I have a lot of information to cover. If you have any questions as I'm going through this content, definitely chime in. I love to hear from you, hear your thoughts. If you're doing some of these things, I'd love to hear your experiences with it so that we can have an exchange. All right. So let's recap what we've covered over the last 5 days. Again, this is Financial Literacy Month, the month of April. And my goal in doing this series is to enlighten and educate and help people learn different aspects, or even just a nugget. Even if you're doing some of these things, if you can pick up a nugget or two of information that you can then apply or share with others to help them improve their finances, that's my goal. It's just number one, letting people know that getting financial freedom isn't this thing that's way off somewhere, that you can definitely achieve financial freedom. And it's not as difficult as a lot of people may think. It's definitely something that you can do. So that's been my goal over these last 6 days, is to give people, if nothing else, hope to say, I can make some simple changes in my life. And there are some things that I can do to change my finances to help me on the road to financial freedom, because there is a direct correlation to our health, our well-being, and the state of our finances. A lot of stress can come from not having your finances in order. And, for those who don't know me, I am a health and wealth coach, and I am big on both of those. Get your finances in order and get your mental and physical aspect of yourself in order. I have a whole journey of what I went through with having financial issues and then also with breast cancer. So I know how important those are. So if I can help you reduce the stress in your finances, that's going to have an effect on your health, because a lot of people stress over money. So that's my goal. Hey, Valerie, thanks for joining. So let's start by recapping. Day one, we talked about credit, the importance of improving your credit and the impact of having a good credit score. And we broke down the different aspects of what credit is, right? So we talked about what makes up a credit score and key areas to focus on if you're looking to build your credit. So ultimately, if you take the step by steps to follow to increase your credit score, now an increase in credit score means a decrease in dollars owed, because you can go back and renegotiate. If you already are in a loan, you can renegotiate to get a lower interest payment and increase your savings. So an increase in credit score can lead to an increase in the savings because it's less interest that you will have to pay. So that was day one. Day two, we talked about the importance of leveraged and residual income. The fact that in order to truly have financial freedom, you don't want to have to work for every dollar that you make. You know, there's a saying, I've heard some people say, I work hard for every dollar I make. Well, I don't want to work hard for every dollar I make. I want my dollars to work for me, right? So that's the importance of having leverage and residual income. We talked about the cash flow quadrant and how we want to shift from the left side of the quadrant, meaning you're making linear income, you work for every dollar that you get, to shifting over to leverage, where you're leveraging the efforts of other people, along with having residual income, money that's coming in when you're not working. So that's a powerful thing. If we want our money to grow, we need to have our money working for us when we're not working. So that's an important concept. So increasing your leverage and residual income means you can increase your earnings. You can bring in additional cash flow. So all of these steps are either about reducing your expenses so you can save more money, or increasing your cash flow by earning some additional money. So it's always either a decrease to keep more or an increase to bring more in. That's what each of these days have been about. And we talked about the importance of getting a business. An easy way to start to earn leverage and residual income is through getting a business. And there, we talked about several different ways of doing that. One of the ways that I love, that's pretty easy to do, doesn't cost a lot of money, and can bring in some leverage and residual income, is through network marketing. So definitely a simple way to start to earn some extra money. Day three, we talked about decreasing your taxes, getting Uncle Sam out of your pockets. It is a couple different ways you can do that. Again, getting a business will qualify you for tax deductions by writing off the things that you're already spending money on. Things like your car, food, traveling, all of those things now become tax deductions that will save you money. You can even, if you're working a job and if you have a side business, you can actually get additional allowances on your W-4 because you have a business. So we talked about how we can get Uncle Sam out of our pockets to decrease taxes, increase your savings. So that's less money that you have to pay Uncle Sam. Day four, we talked about debt and how we need to get the creditors out of our pockets, right? We need to look at a debt acceleration program. Take some of that cash flow that we were talking about previously, money that you earn from a business, reducing your payments by improving your credit score, taking that money to accelerate your debt payoff. Minimizing expenses, we talked about. It's important to look at all your money. Take stock, write out everything, write out every expense that you have, and start to look at ways that you can improve in each of those areas. I talked about how I do that on a regular basis and ensure that I'm getting the biggest bang for my buck in the money that I'm spending. So then you can lay out a program to use a concept called the debt snowball method, which is paying off your smallest to your largest debt. So we talked about that in detail on day four. Debt elimination is really important because when you have debt, you have this thing called interest, right? So you're paying interest payments. You're paying more than what the item costs because someone's loaned something to you. Then we talked about day five, investing, growing your money through investments, owning a piece of America, getting into things like bonds where you're loaning someone some money through a bond, or you're owning a piece of America by purchasing and buying into companies and organizations. and or owning a piece of America by getting real estate. So we talked about different assets, and we talked about the difference between assets and liabilities. Assets are things that make you money. Liabilities are things that cost you money. Ultimately, we want to have more assets than we have liabilities. And we talked about how easy it is to start investing, right? How easy it is to start investing. You can get in the investing game for as little as $5. So we talked about the importance of just getting started and starting small and starting to see your money grow over time. And when you look up, if you start to apply all these strategies, you can put yourself in a great position to have a really nice nest egg. So those are the things that we covered so far in days 1 through 5. Ways to increase your cash flow. And of course, investing is a net income increase. You're increasing the earnings that you have by getting a return on your investment. You spend something once and you earn a return off of it. Whether it's usually a percent in terms of percentages. And again, we talked about growing your money through multiplication, not addition, and why just putting all your money in the bank is not a good thing. We don't want to put all of our money in the bank. So if you have not watched days 1 through 5, I encourage you to go back and review them, because we go into detail about what you need to do in each of those areas to get you on the road to financial freedom. Hey, Lisa, thanks for joining. Knifey, hello, Knifey. I'll be coming to Tampa soon. So that's what we talked about over days 1 through 5. So now today we're going to show how do we bring all of this together. The credit, the leverage and residual income, the taxes being paid, the debt elimination, the investing. How do you bring all of that together into a roadmap that has a solid plan that you can walk through to make these things happen? So what I've documented is steps that you can take for financial freedom, and we're going to talk through those. So what I've got written out is kind of a roadmap on this whiteboard of things that you can do. And so the first thing when we talk about building a road to financial freedom, just like anything, you've got to have a plan, right? You got to lay out a plan, and you got to spend some time thinking about what is it that I'm trying to accomplish? What is my goal? So number one, you got to begin with the end in mind. You know, what do I need to live comfortably? What's comfortable for me may not be comfortable for you. So what do you desire to have when you decide that you want financial freedom? And then before I get into this, let's talk about what financial freedom is, because I think there may be differences in thoughts of what that is. Financial freedom means that you're working toward 2 objectives. Number one, making sure that you got enough cash flow for today during your working years, the years that you're earning and making money. And then number 2, making sure that at the same time you're building up assets, right? So that, again, we talk about those assets, things that can make you money when you stop working, because we all will stop working at some point, and you still want to be in a position where you have money that's coming in still for you. And so that's what financial freedom is, having the ability where money is not an issue. You have options, you have choices, right? You have things that you can do that are not bound by time. You have time freedom, so it's not just having money, but it's having time. And you basically have control of your finances where money is not a stressor for you. So that's what we talk about for financial freedom. So when we think about the beginning with the end in mind, how much money do you need that you feel you would want to have for financial freedom? Is it how much you make today, or is it something more? You know, when you decide that you want to stop working, can you live off of what you make today? So what is it going to take for you to have financial freedom? Now, I will tell you this, there is a concept in the finance world called the rule of 20. If somebody can type this in, the rule of 20, because you need to understand what that means. The rule of 20 means for every dollar that you earn, you should have $20 saved. So think about that. For every dollar you earn, you should have $20 saved. And the reason that that's the case is because you need to be able to have your money build up this nest egg so that you can live off of the money that it generates. And we talked about that yesterday in terms of assets. Assets are things that grow. So if you've got a a nest egg of, let's say, $500,000, right? And you get a 10% rate of return on that investment. In your $500,000 in your portfolio is a combination of real estate, stocks, bonds. Maybe you've got some collectibles. If it's 500,000 and you're getting a 10% rate of return, that means annually you're going to get $50,000 that asset is going to generate in terms of return. So can you live off of that $50,000? Think about that. And that's what that means. A 10% rate of return means you're going to get $50,000 coming in. Now, in this case, we said 20 times, which means, if you're going to make, let's say you make $50,000 a year, 20 times that is basically $1 million that you need to have in your investment account. And that's assuming you're going to get about a 5% rate of return. Now, if you can get a better rate of return, then that means that you can have somewhere between 10 to 20 times. So you need to understand, in most cases, you need somewhere between 10 to 20 times what you make annually or what you bring in annually to set aside for when you decide to stop working. And again, retirement is not a certain age. It's not 62, it's not 65. Retirement is when you have enough money that you feel you don't need to work anymore, that you can still live comfortably. That's what retirement is. Some people retire at 40, some people retire at 50. It really is up to you when you decide to retire. Some people retire when they can start to draw pensions or Social Security, and that's why 62 is the average age for retirement, because that's when people can start to earn Social Security. So think about that. Begin with the end in mind. How much money do you need on a monthly or a yearly basis, right? That's important. Then you need to acquire cash flow. You need to bring in some money. And we talked about some easy ways to start acquiring cash flow. So number one, we talked about taxes, being able to minimize your taxes. Well, if you decide to get a business, which I say again, everybody I think needs a business, at least something on the side that you can do even while you're working. Now you're eligible to take advantage of tax deductions, which will free up some cash flow. And a lot of people don't realize, again, you can get money from your job, reduce the taxes that you're paying on your job, get somewhere between $200 or $1,000 a month that you can then use as what I call seed money to start yourself on the road to financial freedom. Minimizing your expenses. Free up some cash flow by looking at how you can minimize your expenses. What can I do to cut my taxes or minimize my expenses? Look at your cable bill. Look at your spending habits. You need to look at where your money is going, and maybe you can make some cuts there to free up some cash flow. Because once we get that extra cash flow coming in, then we're going to use that money to go on to the next area. So you acquire the cash flow, and maybe it's just a couple $100 a month. Maybe it's somewhere between $200 to $500 a month. Well, if you don't have an emergency fund, you need to build an emergency fund. I call it the beginner's emergency fund, because here's the thing. Life happens, right? Cars break down. Stuff in the house stops working. All sorts of things happen. It's not a matter of if you're going to have an emergency, it's a matter of when. And so you want to be prepared so that you don't have to put yourself in a position where you're in a state of financial ruins because you had an emergency, or you have to go dip into that credit card, or you have to go borrow some money from someone else. So the key is to build up your emergency fund. Initially starting out, I would say somewhere between $1,000 and $3,000, a minimum of $1,000. Ideally, you want to set aside about $3,000 in your emergency fund. The second thing you want to do, because you got to get that emergency fund, once you get that built, then you start investing. If you aren't already. If you're already investing, that's awesome. If not, you got to get in the investment game, because to truly have financial freedom, your money has to grow through multiplication and not addition, right? So you need to start investing. So what are some of the things that you can do? You can do your 401k match. So we talked about that yesterday. If your job has a match, you need to at least meet that, because that's free money that's being given to you in your 401k. If your job says, I'm going to give you 100% match for the first 3% or the first 6%, well, you go ahead and invest that 3% out of your own savings so you can get that match from the company, because that's free money that's being given to you. We talked about micro investing and how you can use an app like Acorn, Stash, Robinhood, apps where you can literally take your spare change, like Acorns, use the spare change from your debit or credit card to start investing. I talked about how that worked for me. So you need to start having your money grow to some extent. We talked about you can go get a small mutual fund. As little as $25, you can go on a site like Vanguard and create your first mutual fund that you can invest on a regular basis. And you can even do a direct deposit right into there from your paycheck right into the account, so you don't even see the money. And now you're starting to build up an account that's growing 5, 6, 7% rate of return. So there are definitely things you can do, and it doesn't have to be a huge investment. You can start small. Then we talked about paying off your debt. So once you get some investments starting to go, you want to switch over and pay off your debt. And again, remember, with a business, you have an unlimited ceiling of the amount of money that you can earn. On our jobs, we're capped at a certain amount of money, right? But you can have an unlimited income earning potential through a business, and a home-based business is a really easy way to do that. So paying off debt. We talked about how you can use the debt acceleration program. Pay more on your principal so that you can get yourself out of debt quicker. And we illustrated that back on day 4, how you can pay more money on your principal so that your interest, you pay less on the interest. So you want to get those creditors out your pocket next. This one may take a while depending on how much debt you have. But if you follow the method that we talked about, the debt snowball, you're going to start to see some relief. Pay off those small ones first, then the next one, then the next one, then the next one. And then once you get yourself debt free, so if you think about, do you know how much debt you have on a monthly basis? You should know that. And we talked about that in day 4, the importance of building a budget, because you need to understand where your money is going. How much money are you bringing in, and how much money is going out of your household? So if you think about this, if you've got, let's say, $4,000 worth of debt every month that you're paying off, if you pay off your debt in, let's say, 5 years, now you've got $4,000 or $5,000, whatever your monthly debt is, that now is freed up that you can put on the next item. So just imagine being debt free and having $5,000, $4,000, $3,000 a month freed up that you can now do something with. And what I recommend is now build out your full emergency fund, because ideally you should have 6 to 12 months worth of living expenses. Now, again, I don't say put all your money again in a bank, because we talked about that. The bank, yesterday we talked about the bank, you don't get a rate of return. So again, you always want to have your money growing. If you're putting aside some money, put it somewhere where it can at least still grow, because wherever you're putting your money, somebody's taking your money and investing it. So you should be earning a percentage off of your money that's sitting there as well. So build out a full emergency fund somewhere between 6 to 12 months is what we recommend, because things happen. I was in a situation where, my job was separated. I know several people who have recently lost their jobs, but guess what? They went through these steps. They built up an emergency fund where, while they're looking for another job, they could fall back and not have to get behind on their bills or go loan or mess up their whole finances because their job went away. Or, anything can happen. For me personally, when I was diagnosed with breast cancer, that changed my whole financial picture, because I decided not to get chemo and radiation, and I decided to go the natural route. Well, some of those things weren't covered by insurance. Well, because I was running these strategies, I had cash flow freed up. I had residual income coming in. I had an emergency fund built up, and I had a business. And so those strategies helped me when life happened to me so that I wouldn't have to suffer financially. So these strategies are intended to be put in place because when life does happen, at least you've got control of your finances and you're in a position to be able to deal with them and not have to get stressed out because you don't have a plan to address them. All right. So once you get your full emergency fund built out, now you're sitting pretty. Just think about that. I got 6 to 12 months of living expenses should something happen. Now I can fully build out my investment portfolio. We're talking stocks, bonds, real estate, if you have a dream of a vision of something that you want to start, maybe you want to start a nonprofit, or maybe you've got a vision of something that you want to do. Now when you've got a whole bunch of leverage right here. Once you're debt free, you have 6 to 12 months of living expenses set aside. Imagine the possibilities. Imagine the possibilities that create. Now you can take that continual income and start building out your investment portfolio. And now think about this, guys. And here's the magic. Here's the magic. I don't know about you, but I want to be the one to break the cycle of poverty in my family. I want to be the one where my kids don't have to start from scratch over and over and over again, or my children's children don't have to start from scratch. And this steps is how you do that. Because imagine you've gotten yourself out of debt, you're investing, you have a full emergency fund. Now all of your money can go into your investing. And now you're building up what's called a portfolio. And guess what? These things that you're going to build with the stocks, the bonds, the real estate, you're going to start earning interest off of those, and you can live off of the interest that you're going to gain. And now you've got a nest egg that's sitting there, so that when you are able to pass this down to your next generation, that's how you break the curse of poverty, guys. You run these strategies and you set up something to leave for your next generation. Now, you need to teach your next generation these same strategies so that the cycle doesn't end after one generation, right? So it's important that once you get these concepts, you start sharing them with your children as well. And guys, if you're getting some value out of this, if this is making sense to you, give me some thumbs up, some hearts. Let me know that you're getting some value out of this. And definitely, if this is a message that you know someone needs to hear, please share this information, because that is my goal, is to make people aware that there is a blueprint that you can follow. So now you build out your investment portfolio, you got this money coming in, and you now are not worried about if the job decides to let you go, or you're not worried about if something happens in life, because you're prepared. You have control of your finances, and that's what it's all about. That's the real American dream. The real American dream is being in a position where you have control of your finances. You're enjoying the freedoms that we have as Americans, but you also are in a position where you have some options, and you're not held to somebody's opinion of you on a job, and you're not held to, things that are outside of your control. You've got control of where you're going with your finances. But in order to get there, you got to have the right mindset. So we got to spend some time talking about mindset, because in order to do something different, you got to change your mindset. And this is something I had to deal with in my journey for breast cancer. When, you get something that's potentially life-threatening, you have to, and you need to make some radical changes in your life. You have to have the right mindset to make changes. So number one, you gotta want it, first of all, and be committed to changing. Because I hear a lot of people say, yeah, I want to change. Yeah, I don't like this. I don't like that. Well, what exactly are you doing about it? Are you just talking about it, or are you really trying to put a game plan in place to change your situation? And so, number one, you got to make sure, are you really tired of being tired, or are you just talking? Are you comfortable with where you are? Because if you're comfortable where you are, then don't complain. And that's just my mindset. Don't complain about your situation if you're not willing to do something. So the first thing you have to do in your mindset is be committed to changing. And it doesn't have to be intimidating, and to know that I can do this. I can do this. So mindset is huge. And when it comes to things like accomplishing your goals, especially when it comes to your finances, what kind of mindset do you have? Do you have a mindset of scarcity, or do you have a mindset of abundance? A mindset of scarcity means, I don't think I can do it. There's just too much to do. There's not enough money out there. There's not enough opportunity. Only the rich people can do this. I'm not rich. How can I do this? If that's the mindset you have, whatever you process in your mind becomes your reality. And guys, I know that firsthand through the journey that I went through with breast cancer. Mindset is everything, because if you don't feel you can do it, you won't do it. So we got to shift our mindset, because having a plan and working it, if you don't believe that you can do it, If you have a scarcity mindset, or you feel like, I could never get rich. Well, if that's the belief that you have, you're creating what's called a self-fulfilling prophecy. So number one, you got to believe that I can do it. And number two, you've got to commit to doing it, because this is not a get rich quick thing. This is years in the making. So if you're looking for a get rich quick, those who get rich quick get broke quick. Trust and believe me. So this is about having the right mindset and having a mindset of abundance. Having a mindset of abundance that says, you know what? I know that money can come to me. I deserve it. I deserve to have financial freedom. Why not me? Why this person over here and not me? I deserve to have money in abundance. I deserve to have time freedom. I deserve to be able to do the things that I want to do. If I have a giving heart and I want to help people, I want to have the financial tools to allow me to be able to help people. So having that mindset is really important. The other mindset that you want to adopt is, again, thinking like the wealthy. The wealthy think about every dollar that they spend. You better believe they're not out here frivolously spending money. They're thinking about, if I put this dollar out, how can I get some return on that dollar? And that's a mindset that I've adopted. Whenever I spend money, I'm thinking about, how can that money come back to me? If I spend $5, can I get a tax write-off for it? Can I get some miles for it? Can I get some sort of interest on it? How can I get some ROI, a return on my investment? Think about things like frequent programs, frequent user programs. Think about things where if I spend this, I get a rebate off of this. Those are all things that people who have money, they do, because they're not frivolously throwing their money out, and they're thinking about, how can I get that money coming back to me? So it's really easy things you can do. I made a post not too long ago where I said, for me, when I spend gas, here's my ROI for when I buy gas. Number one, I have a business. I have a home-based business, and so immediately I get a tax write-off. I have a credit card. I use my credit card for the gas, but then I get points or miles for my gas that I use for trips. So I travel a lot. So a lot of the times when I travel, I'm using my miles for my credit card, but I pay my credit card every month, so I don't get the interest payments, right? So then you can think about, okay, I use the mobile. I go to mobile gas because I use the Speed Pass. After I get 100 points through Speed Pass, I get money off of my gas. So every time I'm pumping gas, I'm getting $1 off, $2 off, $3 off. When I shop online, I shop through a rebate program that I use. So when I make a purchase, I get a rebate off of it. So these are all things that you can think about, again, increasing your cash flow, saving you money, and having that wealth mentality. Why go to the ATM machine and pay ATM fees? You go to an ATM that's out of your network, now you're paying right at the ATM, you're paying, anywhere from $1 to $3, and then your bank is going to hit you up for another $2 or $3. You just paid $5 for getting some money out of the bank. You just gave away $5, and what's your return on that? Absolutely nothing. So you got to start thinking about your money differently, and once you start to shift your mindset, your money is going to shift as well. So when you shift your mindset, the money will shift. Negotiate. I am the queen of negotiation. I struggle with paying full price for anything, negotiate your bills, negotiate things that you're purchasing. The worst they can say is no, and it doesn't hurt to try. And I've been in many situations where I negotiate and I end up, getting a deal of some sort. So, negotiation is a key aspect of the wealthy that they do to try to maximize whatever it is that they're trying to purchase or spend. So those are definitely some steps that you can take. If you've got some other ideas about how you can adopt a wealth mindset, please share them in the comments. I love to hear about what other people are doing. What are you doing to develop a wealth mindset? How do you think about things? How do you process things? Because it doesn't matter if you got a plan. If your mindset isn't right, you're going to fall back into those same traps that have gotten us to where we are with our finances. So again, if you want to do something, if you want to be something different or do something different, you've got to change your mindset. So really important. I wanted to spend some time on that. Looking at the comments, I don't see any comments. So let's wrap this up by talking about the action plan. What is the action plan? What's the action step for this last day of this series? Well, it's number one, you got to think about where you're trying to go and really get serious and reflect on, where you want to go with your finances. Number two, lay out a plan. How much money do I really need on a monthly basis? Look at what your living expenses are and say, what's comfortable for me when I decide that I don't want to work again. I don't want to change my standard of living personally. I got a lot more traveling to do. It's some things that I want to do in terms of some initiatives that I want to work on, some organizations that I want to start. So I've got a lot of things in my mind where I'm going to need the same, if not more money than what I'm bringing in right now. So think about that. So that's your action step. Lay out your plan. Look at these steps. Kind of look at it. Now, I will tell you that I personally use a software program that actually lays out all 7 of these steps. I have a software program that I use that does this for you. So if you're interested in the software program that will lay these steps out for you, show you some steps on how to minimize your taxes, show you some steps on how to get yourself out of debt quicker, I have a program that brings it all together and helps you work through this step by step. So if you're interested, definitely follow up with me, or if someone invited you to check this out, you can follow up with them as well. So if there are no comments, it's been a pleasure, guys, sharing this information with you over the last 6 days. I truly hope that you've gotten some value out of this and that you've been able to also share this information with other people. It's been a pleasure for me. And, as I continue to learn and get information and grow, I will continue to share. But in the spirit of Financial Literacy Month, here's to your health and wealth. Have a good night.